Money work for you, and it doesn't take a fortune to begin investing.
The Dow closed down well over 100 points yesterday and nearly 100 points the day before, but don't let that scare you away from getting in the game. Joining us this morning with some tips on investing on the cheap is Christopher Castaldo from Stock Traders Press. Thanks very much for being with us.
Oh, thanks for having me back.
So it's a buying opportunity, right, when things go downhill on Wall Street?
Well, I like when stocks get cheap, but I don't see really any days I do see every day as a buying opportunity, because investing should be something that you do over a period of time. You shouldn't just throw one chunk of money in the market. You should dollar cost average and put a little money in the market on a regular basis, and that way you'll diversify and have good cost averages, and you will buy dips.
What is the minimum amount you need to really have it be worth your while?
Well, I guess if you go to the casino, you can play nickel slots, or you can sit at the big tables, but the market is the same way. And the important thing is just to get started. You can put $50 or $100 into the market, and if you have that much to invest, I wouldn't say buy individual stocks because you don't have enough to diversify, and most people don't have the discipline to do it. But I would buy a broad-based mutual fund or an index fund, which the diversification will be done for you.
Right, you basically are investing in a large number of stocks, and somebody else manages those for you, right?
Yes, you have a professional manager, and they have, funds that will focus on bonds or retail stocks or energy stocks. I would buy a broad-based mutual fund that covers the entire market.
Energy's pretty hot right now, right? If you can invest in there, that's good advice.
Well, it's really good, but eventually energy and real estate is like musical chairs, and someone's going to be left without a seat. You don't want to chase a hot sector, because chasing it sometimes is not good, and it could turn a bad situation worse, where you're kind of buying the top. People tend to jump into real estate. Everybody's buying real estate, but eventually someone will buy the top tick, and that could hurt. So you don't want to just chase winners. You want to buy sectors that have been depressed a little bit. The financial sector hasn't been doing great, but banks are going to be around for a long time, and so are brokers. So sometimes you want to buy some of the sectors that are out of favor, as opposed to buying the stocks that are always in the news right now.
So most of the growth that we're likely to see in energy stocks has already happened for now, right?
Sure. I mean, how much higher can gas prices go, or natural gas prices go? And yes, they could go a little higher, but I would rather buy something that's a little out of favor, where I don't have as much risk. Because if we hiccup, we can see energy prices drop sharply. But I think you're really trying to squeeze the last, drop out of it.
A lot of people will say that they simply don't have the money to invest in anything, but can you give any advice on how in your daily living you can come up with as little as $3 to $5 a day over the course of a month, which adds up to $100, $150 a month? How do you do it?
Well, I guess now with gas prices, people have to be more conscious of their driving habits or their energy conservation habits. And you can do the same thing with your everyday life if you really make a plan and you write down your expenses. People spend money frivolously. I mean, don't go to Starbucks that extra time for that $4 cup of coffee. And the nickels and dimes add up, and that's why people on, average salaries over time can retire very wealthy. School teachers probably retire some of the wealthiest because they're very frugal, they're very prudent, and they have a little bit come out of their salary every single week, every single month, but they do it over 20 years. And that's the key to successful investment management, doing it over time. Don't overweight in one stock or one sector. Diversify. Because if you have 10 or 15 stocks and one doesn't do well, it doesn't affect your overall portfolio, because you only have a small portion in there.
And start young.
Absolutely.
Yeah, that time is of the essence, isn't it? Because the sooner you start, the better off you are.
Absolutely, and it should be woven into the fabric. I mean, start putting money into an IRA. Start saving for a rainy day. And, the earlier you start, the more you'll enjoy, I guess, your golden years as you move towards that age.
The golfing years.
Okay.
The golden years of the golfing
I like
years,
that.
yeah.
All right,
Thanks,
Christopher Castaldo, thanks very much.
Thank you very much.
Yeah, thanks
Appreciate it.
Thanks.